Hello, everybody. My name is Mike Bosma. I am a principal at Clifton Larson Allen. Been with CLA for about 3.5 years now. And if kind of a little backstory before I kind of get into PPP forgiveness, I got real involved with all things opportunity zones last year through CLA, and that was interesting in and of itself. I kind of thought this could be the next big thing for the city of Reno. I've been here for 26 years. And then COVID happened. And as I started pivoting away from doing opportunity zone deals, I really started getting, with all of my clients, as I mentioned, I'm a CPA, and I had, clients from various stages of trying to figure out, how do I keep my business open, and even before the CARES Act came out that funded these PPP loans, I had, just anecdotally, one good close friend of mine owned an events business, and she had 35 employees that had worked for her from anywhere from 6 months to 20 years. And she called me, she's like, Mike, my events I went from fully booked between now and August, and now I don't have anything between now and June. And this was in latter part of February. And like, what do I do? And what I did was I said, well, unfortunately, what you have to do is you have to lay everybody off. Now, imagine, it's different today, but imagine back then where you can't find people, you've got your team that you've had for a long time, and this thing is just going to be temporary. It's a flu bug going through. And what ended up, and so she had to lay off her staff, and then the CARES Act came out, and then they, the promise of, hey, we're going to fund this thing. We're going to fund keeping the economy going, not through unemployment necessarily. We're going to have business owners employ these people, and we'll pay for it. The government's going to pay for it. And so that was the original genesis of the PPP, and then the subsequent forgiveness. Well, hey, go through the loan. We'll have these SBA banks process this. The SBA originally tried doing it, and they just did not have the infrastructure to do it because they're not in the business of approving loans. So a little bit of backstory about a little bit of my journey that kind of got us here. So, and if you have questions, throw them into the chat. I've got Rich Tower, who really has been my go-to guy in the office. Rich is kind of heads up our business operations group. And when the PPP really became a full-time thing for me, and CLA, my firm, started doing these webcasts very, very frequently, I tasked Rich with saying, hey, you gotta stay on top of this. So Rich has, I've asked him to make sure he's answering all the chats as they come in. So as we were saying during the social half hour, everything PPP is in a state of flux. And so, this slide deck that I'm going to go through with you is accurate through June 29th of 2020. And it's a moving target. There's still questions that need to be answered. And then depending on the political winds, just anecdotally, when the PPP program came out, there was some political pushback that, hey, all these people were getting this loan that really didn't need it. It was being wasted on, and the people that couldn't get it because they ran out of money on the first tranche of funding. And then Treasury came out and said, hey, if you didn't need this money, you have until this date to give it back. And that created a whole nother firestorm of political winds. And then the day before that date, they said, never mind, if it's less than $2 million or less, we're not going to audit you. You're safe. So the 2 weeks prior to that, there was a lot of energy going into, documenting, hey, we needed this money and this is why. So it's one of those things I would encourage you, if you're in the wind and not certain about what your PPP forgiveness plan is, CLAconnect.com. There you can sign up for anything and all things that as announcements come out to be able to get those. Somebody's not muted. Let me see who the offender is. Hold on, just give me a hot second, guys. I just got to find out to mute the right one here. I'm sure this is just that there's a button that's a mute all. I just don't know where it is. I apologize. There we go. Gotcha. Ha! Oh, you probably just got some people that joined late. All right. So that's where I guess where I was going with that is if you're in a spot where, hey, you're in the gray land, you don't know if your loan's going to be forgiven or not, that you just go to that claconnect.com and get on the distribution list. So the people that are tasked with keeping that current every day, that you'll get as stuff comes out, and it comes out usually at least every week. So the big one here, in fact, this is when I took, when I started getting back to my tax practice, was on June 5th, 2020. And the PPP Flexibility Act extended the coverage period from 8 weeks. Remember, when you got your PPP loan, you did 8.5 weeks of compensation. That ended up going to 24, and that's the amount of your loan. They then said, hey, we're going to extend that 8-week period that your forgiveness is based on to 24 weeks. So one of the important things you need to be aware of is if you were pre-June 5th, 2020, if you fall into that window, you have
Did you do all this stuff?
Mute. Got it. I get it.
Or was it right there?
Mute. Ha. That you can either pick the 8-week or the 24-week period. The other thing they did, instead of a 2-year period, they set the minimum term for new loans at 5 years. Now, I talked to a couple good friends in the banking industry. They're not happy about this because they really don't want to service this debt over 5 years. They just kind of want it to be gone. They've already made their money. But you definitely, if you don't have it forgiven, you have a window of time to get that taken care of. The other thing that I guess is an interesting one for a lot of people, you're going to have this window. So what should happen is, if you haven't already, your bank is going to send you a form to say, here, you need to tell us how much of this loan needs to be forgiven. We did a webinar with First Independent Bank's customers, and talking to Jim DeVold, it was interesting because he said, yeah, we want to hold off on doing any of this paperwork so that we just have to go through it one time, rather than the numerous iterations of the PPP application process, which ties up a bunch of bank resources, but also business owners' resources as well. And that part of the process is the bank's going to ask for, after you get your loan, you're going to have this 10-month period to be able to report back to the bank and then either start servicing the loan or just have it forgiven. Now, from a financial statement perspective, or like I am doing more and more buying and helping people buy and sell businesses, this liability for the PPP is a real liability that lives on your balance sheet, and it could be a liability that could be ended up getting hung up in escrow, because if you're selling your business right now, you're in the middle of your forgiveness, and that's just something you have to work out in the negotiations with the buyer. The other thing you need to be aware of, that 60% of payroll has 60% of costs spent out of the PPP have to be spent on payroll. So there's not more 40% that goes to non-payroll. That was a significant relaxing of the rule. And although it was originally interpreted as kind of a minimum, you had to get there, and it was a cliff. Then they came out with this IFR interim final rule on the 10th of June that it's, hey, we're going to do proportional forgiveness. Again, this is where the political winds really weigh in. So, and by and large, depending on where your full-time equivalents are, that is either, for most people, a godsend, because a lot of their overhead stayed the same, even if they had a reduction in payroll. And then my heart goes out for a lot of those businesses that are now being kind of caught in the second wave of shutdowns. They're really, really scrambling because of this full-time equivalency test. Yeah, there are some carve-outs, but people are trying to keep their employee base up and they're really kind of stuck right now because they're closed. Now there are safe harbors for the full-time equivalency reduction, this reduction test. So, and this is an important one because just generically, if you keep the same amount of people, pay them what you've always paid them, you're good. You don't have to think about it. 100% of your loans will be forgiven. Invariably, many of us found out the hard way that because of the federal add-on to unemployment, it was very difficult for people to decide to come back to work because they made more money staying at home. And many of them had kids that they had to deal with at home. So they say, why would I, and daycare is closed. So you kind of put people in a very difficult spot that it was better for them to be home and get paid to be home than to go back to work. And so now, as your loan is all based on, hey, you're really supposed to keep the same amount of people employed, made it difficult for employers to keep those employment numbers up. But however, if you're not able to rehire a previous employee and are unable to hire similarly qualified employees for unfilled positions, and that's where it gets into the documentation is, hey, they refuse to come back, get that papered, put that in the file, and then you get out in the various channels to be able to go and hire somebody that's equally qualified. And that you're unable to return the same level of business activity due to compliance with OSHA, CDC, or other requirements, ergo, Governor Sisolak closing down your restaurant or closing down your bar, or you're limited to 50% capacity, so you don't need the same amount of people. All of that gets down to that interim final rule that came out on the 22nd of June that gives some implementation guidance on that. And then there also is, that I think is oftentimes lost in the mainstream media, that there's some FICA deferral to help you on the cash part of that on your FICA taxes as well. Now, this thing did not address the deductibility of expenses. I'll just pause there for a quick moment. So so we're talking about PPP forgiveness. So you get your loan forgiven. Let's say you get a $100,000 loan, 100% of it forgiven. The current position from Treasury is, although the statute says clearly that forgiveness is not income, Treasury has said that the expenses that tax-free income paid are non-deductible. So it ends up being taxable. So they just got to kind of keep that in the back of your mind as your taxes become due. Other components of loan forgiveness, the last tranche were updated on the 16th of June. And then they also have these easy form and instructions that were issued on the same day, especially self-employed with no employees. They automatically meet the safe harbor for no wage or headcount reductions, and they meet the safe harbor for no wage reduction to new unable to operate at the prior business level activity. So you're not asking for one of the exceptions, and so you get the EZ form. The other thing that I've got a lot of feedback on from banks is that they're still updating their own procedures, because once you certify to the bank, then the bank has to, they forward that to the SBA, who they end up coming back, and they're trying to make this as streamlined and as non-riddled with problems as possible to try and keep it efficient. Again, trying to get it right the first cut. So some insights. Remember that compensation is limited to $100,000 annualized per employee. So you can only get so much forgiven under this 8-week or 24-week time period. Classifications, health insurance and retirement plans are includable for owners, and the safe harbor application that the wage and the full-time equivalent elimination measured at the earlier of 12/31, or the forgiveness application date. So you got a couple different dates. Again, with most, I think a lot of people, when it went to 24 weeks, they're going to fully be able to extinguish the amount of loan that's not forgiven, so they'll have a fully forgiven loan. A better way to say the same thing. And then being able to document this unable to operate. And so especially right now, great state of Nevada, 50% of restaurants capacity. I think what's interesting, actually, I was at lunch today at the Grill, and I think that was one of the places I think that figured out 50% of capacity doesn't mean half of the tables. It means half of what the fire department says they can pack in. So they were a lot fuller. I've seen a lot of restaurants. I think a lot of business owners are artificially throttling down their own revenue when they don't necessarily have to. There was an interim final rule that was issued on June 22nd that talked about timing of forgiveness. You and I guess if a wage reduction is applicable, will apply for the full 24 weeks. It could apply for the end. I'm trying to remember CP. It's another acronym I wrote down. Hold on a second. I was trying to. Covered period. Knew it. Can apply before the end of the covered period once all the loan proceeds are used for the forgiveness is requested. So depending on kind of when you got your loan, if you're in the 8-week or 24-week window, then that's going to kind of trigger the timing on when you need to be able to get the application back. No guidance on, and this is some of these things that I'm going to talk about here for a hot second are frustrating. There's no guidance on implementation beyond the wage reduction, and no guidance on how to reflect that on the application. So the application hasn't been updated to be able to say, hey, there are these extenuating circumstances to be able to document that with your bank and subsequently the SBA. If you're, I would imagine most of the people on this call are either an owner employee or are working for an owner employee that said, hey, you got to figure this out for me. And so this is where some of the nuances come in, some of the things just to be mindful of as you're doing your forgiveness calc. First, as I mentioned before, cash compensation is limited to 8 weeks or 2.5 months of 2019 comp. And then you include employer paid healthcare and retirement. That's an important component we're going to talk about often in the next couple slides. For S Corp owner employees, so this all kind of gets down to what kind of entity are you? So if you're an S Corp owner, remember as a greater than 2% owner of an S corporation, you're required to include the cost of your healthcare in your line 1 taxable wage for your Form W-2. So when you look at what that max compensation is, $100,000, that the amount of your healthcare is going to be baked into that taxable compensation. But the amount to include for the employer portion of the retirement, and as I mentioned, not for the employer paid healthcare. So that's where you kind of it's an interesting one. The retirement, the employer port of the retirement not included, but the healthcare is. Schedule C's, if you're Schedule F or general partners, I don't know if there's very rare running general partners anymore, but health benefits and retirement are treated differently for those folks. So they're limited to 2019 Schedule C for the 8 weeks or 2.5 months, and cannot include the employer health care or retirement. Business activity safe harbor. So this is kind of where we get into some of the current state of the state of Nevada. It exempts you from the full-time equivalency test. So if you had 100 employees 2019 and you only had 50 during your testing period, your 8 or 24-week testing period, you can get an exemption if you document the reduction in business activities and it was either directly or indirectly from COVID requirements or guidelines by Health and Human Services, CDC, or OSHA. So OSHA is an interesting one, depending on, I guess, where you fit in the political spectrum. I'm getting a lot of feedback from entrepreneurs that OSHA is really a problem with trying to keep a business running because of their own interpretation of these social distancing guidelines as it relates to a work environment, and are in the regular business of issuing citations for the same or violations of it. What that means to you as a business owner, though, is if you can only have a maximum amount of people on a job site, if you're a contractor, for example, then that, and you document that to say, okay, hey, here's how many I can have on the job site, and so I can't keep my full-time equivalency because OSHA won't let me have this many bodies on a job site, then you're going to be able to get some relief from the FTE equivalency. State and local government shutdown orders based on federal agency guidelines. Again, if you're a restaurant that, or not a restaurant, but a bar that just got shut down again, you're going to lean heavily on that one. And then, of course, relevant borrower financial records. So, and then there are revisions to Interim Financial Rules number 3 and 6, talking about additional conforming changes. It did clarify some of the payroll limitations regarding the 8 or 24 weeks, and then the owners, which is 8 weeks or 2.5 months if using the 24-week CP. So covered period. So just a matter of kind of where you fit. You want to follow. Am I following under IFR 3 or IFR 6, depending on what's going to suit you better. Now the revisions, the first interim financial rule that was subsequently clarified. So they brought some flexibility in the rules. That's when they clarified the 60% payroll requirement. Remember, it was 75%. They rolled that back to 60%. And then they clarified a few new deferral terms that relate to all PPP loans. So some of the things that you want to just be, again, top of mind on. So the concept of paid or incurred and paid that are eligible for forgiveness. And this kind of gets into this, I think, fascinating. Rich Tower in my office thinks fascinating. Maybe the listeners might think is like watching paint dry, boring, but you kind of get into this dichotomy of, paid and incurred. So you're thinking cash versus accrual. For example, bonuses. This is a common question. So here I had these people that were out of work for a period of time, and they actually came back. Yay. Well, can I just give them a bonus? So that way, if the difference is I'm not going to have this forgiven anyway, and if I give them a bonus, I still get it forgiven. Why wouldn't I do that? You're just going to have a happier employee. Big questions on if that worked or not. According to this IFR, it does. But of course, there has to be, in the ordinary, normal business sense of, they deserved a bonus, I gave them a bonus. Hazard pay is allowable. So a lot of people are saying, hey, particularly if certain union contracts, they're saying there's a hazard pay component of this, and because I can come to work and get sick, and if I come to work, I get hazard pay. So that's also eligible for forgiveness again, but you're still limited to the $100,000 threshold annualized, which is the new magic number, $15,385 for an 8-week period. Excuse me. So, and remember that if you're a W-2 employee owner of a C Corp or S Corp, you use your W-2 wages, and the healthcare and retirement plan contributions are allowable. The self-employment, use 2019 Schedule C, line 21, no healthcare, no retirement plan costs. For general partners, use the 2019 K1, reduced by various amounts, no healthcare, no retirement plan, because those are all not baked into the amount of income that flowed through that they're deducted on a different part of your tax return. And you only include the employer portion of healthcare and retirement plan costs, not the elective deferrals made by the employee to pay for healthcare or to pay for the retirement plan, because that's their own compensation. Non-payroll costs. This is where if you also you run through your 8-week or 40-week, or I'm sorry, 24-week run, and you still have cash to spend out of your PPP loan, what else can you throw in there? Utilities, rent, and so some of the examples they where you can have more than 2 months of allowable costs for utilities and rent that will be eligible for forgiveness. But you can't prepay. I think that's a common one. People are like, hey, I'll pay next month's rent, call it good. Very much limitations on the ability to do that, or really can't do it. Or same, the questions is, I should say prepayments, there's no guidance, but if you look at the intent of the legislation, that if you're just prepaying for expense, probably not going to be baked into there. But the amounts of arrears is another one that is like, hey, I couldn't afford to pay rent, and then I got my PPP. Can I go back and pay it? There's still no guidance on that, definitive guidance. So that's still in the wind. The other thing that for some review procedures that came out on May 22nd, they will have 6 years to review. Imagine if you're in the middle of selling your business that they have 6 years to come back and say, oh, do-over. And what's going to change in 6 years? Oh, well, we know regardless of who wins this presidential election, there'll be somebody else 6 years from now. So who knows, based on the political winds, if they're going to go back and try and claw this money back. The eligibility of review, this is, I mentioned earlier, where they said, hey, if you're under $2 million, we're going to give you a safe harbor, you're good to go. But I have read other pundits who have said they still have the ability to look at it if they have a reason to believe that you, in essence, defrauded the government. In fact, the person who told me that was an FBI agent friend of mine. Says, yeah, there's all kinds of people out there that were going after this money that didn't necessarily need it. And I thought, oh, okay, so there's just a different avenue to get to the same result, which is getting their money back. And then the other parts of the elements of review, loan amount to be, and the use of the proceeds. Remember that those proceeds, there was no direct tracing requirement in the legislation that said you had to have a segregated account. I think the rule of thumb, particularly early on, was people were told, and I know we definitely instruct, hey, if you just put this money into a separate account and then just spend only allowable things out of it, you don't have to keep the separate accounting that may or may not be sufficient for the government's accounting requirement. So some people did, some people didn't. It wasn't required, but I'd say it was the best practice. So that way you can, and then that part of it, yeah, did you use a full amount for allowable expenditures, and then that is directly tied into loan forgiveness. Now, as I kind of alluded to earlier, it's unclear if the $2 million threshold for a total review will be measured at the affiliated group or individual loan level. So think of it this way: if I have 5 businesses, I would have had to have done 5 different PPP applications, and there's that $2 million level, that $2 million threshold. Could you aggregate those 5 loans in to determine the $2 million? I think prudent business owners are going to have their paperwork documented sufficient so that if it is looked at any great level of detail, it's going to be a bit of a no-brainer. You don't want to, I guess I'm a fan of, you don't want to be scrambling on this one at the end. And then, and by that I mean, once your bank sends you that application for forgiveness, you want to be able to quickly turn that around with good, solid documentation, like you're waiting for that email from the bank. And that is going to give everybody comfort that you had your accounting act together versus scrambling, waiting to the last minute. And then it's a bit of a mad rush. And then I just think those are going to get a lot more scrutiny. The other thing I just wanted to finish with, just to make sure we're all on the same page, is just kind of hit the overview, went through some of the nuances of the forgiveness, but what we didn't do is we didn't talk about, okay, what these total buckets of forgivable costs are. So first, under payroll, remember, you can either, the 60% of the PPP loan needs to be paid for payroll. Well, what is payroll after all? Well, that's salaries and wages, and that includes PTO, sick, but limited to $100,000 annualized, group healthcare benefits, retirement benefits, and the employer portion of state and local payroll taxes. So the $100,000 is just on the salaries and wages part of it. Then you layer on healthcare, retirement plan, and employer portion of state and local payroll taxes. Payroll costs. So this one is a bit of a sticky wicket, and all I'd say is if you're listening to this webinar, I'm assuming you've got some hair or you need to pay attention to your PPP forgiveness calculation, because if you said, hey, we got 8 weeks, and the calculation was 8 weeks of comp, I got 24 weeks to spend it, and it's 100% payroll, I don't have to think real hard, fine. Or your full-time equivalencies are exactly on par with what they were in 19. Most people, because of the way COVID hit their business, they're just not in that spot. They're trying to say, okay, there's a portion of this loan that could potentially not be forgiven. And so then you're going to get in these nuances of looking at, you have this window, either 8 weeks or 24 weeks. Well, what happens if you have payroll that falls kind of in the middle of those periods? And so that's where they say, hey, we're going to create this alternative payroll covered period that starts the first day of the first pay period following the PPP loan disbursement. Remember, loan forgiveness is only for things that were spent after you received the cash, after your loan was funded. And I think there's an additional question that I've seen kind of bantered about, is there might be a day lag between when you signed your loan documents versus when you were funded. And it's my understanding that it goes from the day you're funded, not when you were approved, not when you signed the documents. Hopefully you're not having to get to that level of granularity. And then there's right now the PPP forgiveness application. You submit that on Schedule A, and then you include a worksheet that has a detail behind it. Actually, I'd say Rich Tower, my office, has a spreadsheet that's actually pretty cool that actually helps calculate this. That you can get that at claconnect.com or send him an email, rich.tower@claconnect.com, and go and get that worksheet, kind of help you work through, the 8-week versus 24-week, and then all these costs that are layered on, and then the limitations at, depending if you're an owner employee or just an employee. Because remember that that $100,000 limitation is real, right? So especially for some of your more highly compensated folks. And then just remember the non-cash payroll costs, healthcare, retirement, employer portion of state taxes must be paid during the covered period or the alternative payroll covered period. So the 8-week period is that magic number, $15,385. The 24-week period, $46,154, and owners are limited to $20,833, which is 8 weeks of comp based on 2019. The payroll costs versus non-payroll costs. Non-cash payroll costs, I mentioned healthcare, retirement, employer state tax must be paid. And then for owners, as I kind of alluded to earlier, excluded self-employed general partners and S-corp owners. And so you just want to get the right buckets going for whether healthcare or retirement are included or excluded. And then the non-payroll costs, the holy grail. This is really where the meat of what you want to think about. If you can't get there with payroll alone, then you want to throw everything in the kitchen sink that you can at it. So, so from that perspective, I would say the interest on your mortgage obligation, as long as it was in place before 2/15/20, any rent. Now I would also say try not to get, or don't try to get, but don't get too cute on, I've had various business owners that have said, well, can I just increase my rent? And the statute says, the CARES Act says, it must be in place at 2/15/20. Do you want to be in a spot if you said, well, I just went back because I never had my rent documented, and then I just decided it was documented at some higher amount so that you qualify? I think those are things that you want to talk to your attorney about, because there's a very real fraud component of this legislation, that it has a lot of hooks, and you're certifying that you meet these criteria, and then you're going to certify that the information that you provide to the bank is true and accurate. So I would say, first cut, try and get it with labor. Once you go into these other buckets, I would just try and stay, oftentimes in tax planning, we stay, you depending on your level of risk, sometimes people are very aggressive, some people are very conservative. And I just tell people in all things PPP, you just want to stay center of the road. Just don't try and create your own little nuances to this legislation, because with the benefit of hindsight, people could have a different opinion, and that really puts the business owner in a bad spot. I mentioned utilities, and then interest on other debt obligations. Which is, you can pay it, but it's not, so it's a source that you can use the proceeds for, but it's not considered for debt forgiveness. So you can spend it on it, you just don't get it forgiven. Non-payroll costs, flexibility to include costs incurred during the covered period if paid on before the next regular billing date. That's an important distinction. That's where, as you're talking to your bookkeeping department, hey, when you're putting these invoices in, that you're being mindful of when the covered period is. In fact, I would tell you, most people from a bookkeeping perspective, what they do, whoever's entering that into QuickBooks, they're just doing, today's the 22nd of July. They're just, what's the date for the invoice? It's the 22nd of July because that's today's date. They're not actually looking at the date of the invoice and putting that in QuickBooks. And I'd say you want to have some area of visibility on that to make sure that that's dialed in for whoever's entering your payables into QuickBooks or whatever accounting system you use, so that it's not only shows what the date that because remember, it's paid or incurred. So if you had a period, you get your cable bill and comes in today, but it was for the last month, and that was for my 8 or 24-week period, you want to make sure it's captured in that calc. And a lot of times people are just running these reports to see what they spent in this covered period. No prepayments of future interest on mortgage debt, but it's unclear about rent and utilities expenses as far as prepayment goes. Like And then potentially include additional non-payroll costs that are incurred prior to the covered period if paid during the covered period. So you have some latitude there. Max forgiveness amount 40% for non-payroll costs. That's significantly more flexible than the original 25% that you can pay. Some forgiveness items to consider. Number one, how much did the entity spend on allowable costs, right? Those are those 4 buckets, lines 1 through 4. Did the entity maintain wages at least 75% of the prior quarter? This includes the high earners, line 5, Schedule A, line 3. Did the entity maintain full-time equivalents, which includes rehires through 6/30? And that goes on line 7, Schedule A, line 13. Number 4, what was the PPP loan amount? And 5, was enough of what was spending on payroll, 40%, did you hit that? And then lastly, last bar, did the entity receive an idle advance up to $10,000? Just for sake of fun, I put some resources for your consuming pleasure to keep current. I should have also, yeah, there you go. The biweekly live streams at claconnect.com. Also, there's a website you can sign up for there as well. So now the big question is, did Rich keep up, or did anybody? Because chat's blowing up, but I can't multitask like I used to. So let's see.
Rich did a great job of answering questions as you went along.
Rich is an amazing guy. I appreciate it. Yeah. So bank come out with forgiveness portal. Not yet. It looks like mid-August. I've been talking to Jim DeVold. They were actually wanting to wait towards the end just so they can only do one cut at it. Is the PPP program extended August 8th? And actually, somebody and evidently they still have some PPP proceeds that are still out there. Wells Fargo sent updates. Yes, you can still apply till August 8th. And many companies use the links provided by their banks to get the PPP loan. Some people, it's an interesting. So one of the, if you unfortunately got 2 PPP loans, you need to send one of them back. I know that's not what the question is, but there were, as money started running out. So one of the declarations that you made on the PPP application was that, you don't have other applications outstanding. And that really put a lot of people in a hard spot because they were like, my bank, especially if you had couple of big banks, they're completely MIA. They ghosted you. They're not responding to emails. I had a good friend who had a relationship manager with Bank of America here in Reno, but then for PPP, they put her in St. Louis somewhere. That their voice messages were full. They weren't responding to emails. And so they're like, my business, I don't know if I need to shut it down or not, or if I'm going to even in the queue to get this PPP loan. So as a backstop, in fact, I think it was another one of the bankers said, well, if you haven't heard back from the bank that you submitted your application with, we don't see any heartburn with saying, well, I don't know if I have an application, but I need to put one into a bank that will at least accept it while there's still money. And then usually what I would see would happen is you'd get approved by one bank, and then shortly thereafter, you'd get denied by the other bank saying it says you already have a loan. But if, heaven forbid, you ended up with 2, I would talk to an attorney and definitely send the money back. Yeah, because that one, you can be in a hard spot there. If the company has fully expended a loan, can we submit the forgiveness application before the 8th? It really depends on if your bank is accepting it, because remember, so they do have the application out, but the bank is going to, each bank, as I understand. No idea. Who is that? Any idea, Dave?
That's the person on the iPhone.
Ah. Okay.
I think the aliens are landing.
See, even the aliens were confused about the PPP and they tuned in.
Right, right. So the bank, so the question was from Dan is, if the company's fully expended the loan, can we submit the forgiveness application before the 8th? Well, there's two tranches of that. First, depending on if you're the 8-week or 24-week bucket, if the appropriate bucket has to be extended as far as time, because they just remember the bank is just going to take it and certify it, and they're checking lists. So they're going to say, okay, here it is. Check 1, it's for the entire 8-week or 24-week period. Check 2, do any of these line items exceed the maximum compensation for, and is it calculated correct? So even if you've expended it, it's going to be, it's really more of a, will your bank take it question. And I would say talk to your banker about it. Yeah, because I'm talking to a lot of bankers, and that is where they're at in the process. Actually, that's a question on. I asked that one for Rich. He did answer. Yeah. Must you keep the full-time equivalence of test period for the entire covered period, or just at the finish line? That is a good one. All right, Rich, would you do me a favor, unmute yourself? I'd like to get your some color on that one, because I think especially now with some of these places shutting down is and I know there was the June 30th deadline. Do people have flexibility on that FTE right now?
Well, that's again, the guidance is a little murky, like everything else with PPP. And the real question is a lot of people obviously aren't going to be able to, they're not going to have the funds to cover a covered period of 24 weeks. So they're going to run out about maybe like week 12 or 14.
Right.
Right. And then do they have to maintain their FTE count through the entire covered period to the end of the 24-week period? We don't know the answer yet.
Right.
Obviously, the answer we'd like to hear is that, of course not, right? You've run out of your money, right? You can, that will become the terminus of your covered period, but the Treasury hasn't answered that question yet. So
I guess that kind of gets you back to, if you're nearing the end of your 8-week period, because remember, for the pre, I forget what the exact day was, but it's like June, mid-June. But when they came out with the 24-week criteria, if you were pre, you can choose whichever one you wanted. And so maybe in that case, you're saying, hey, I want to pick the 8-week, and that way the terminus is going to be the end of my 8-week period, or June 30th. And
right, that would have been anything before June 5th when
June 5th, right.
the law was passed. So yeah, they have the option of 8 or 24 weeks. Anything after June 5th they are default to the 24-week period.
Right. So, and I think that's an important one. That's why you kind of got to use that miracle spreadsheet from Rich and CLA, so that you're running the math on that. Because yeah, if you're going to run out of juice, that could be a problem from an FTE perspective. Okay, Rich put in your email. Awesome. Any other questions?
I have a question. It's
Sure.
kind of a specific case. We had an employee that we were going to let go before all of this, or she was on her way to being let go. So we had interviewed for new employees before we let her go. And then when we had to close down for a little bit, we put her on a temporary layoff, and then we didn't bring her back. But we hired another person at a lower position, and that person's still with us. So our full-time equivalence is the same. However, the pay is lower for our new person. Is that forgivable, or we didn't try asking the first person back because of performance issues? So
I got you. I don't know. I'd throw that one out to Rich. I have my own opinion. I want to. What do you think, Rich?
If yes, you're allowed to obviously let people go, and they can be excluded from the FTE count. You might have to provide additional documentation to show that, and you can obviously include the person that was hired and they wouldn't necessarily, you wouldn't have to do that kind of the wage reduction comparison because they are two different people with two different
Okay.
positions.
Yeah, we have documentation of like performance issues and such before March.
Mm-hmm.
So like we have that she was already having trouble.
Right. Yeah, and that's what Rich said is exactly what I understood, because the full-time equivalent isn't a compensation calc, it's an FTE calc. So that way because they're back, they trigger on that, and then it's a matter, okay, here's my FTEs, what are we paying them, and did we pay them enough? Now, if you're, just the math is, if you're using an 8-week period, it's a little bit harder if you're paying people less, because it's a little bit harder to hit your 60% and spend all the money in 8 weeks if that's the period
We
you're
just
looking
got our money like 2
so
weeks ago, so we're on the 24 week.
You're the 24-week plan. So assuming because remember, it's only based on 8 weeks of comp from 2019. So if you just got yours and you plan on being in business in 24 weeks, you should be fine, no problem.
Oh yeah,
we're 100% on wages.
Spending it.
Right. Yeah, so kind of the math on that is, let's say here's the FTE, so you'll have no FTE haircut, and then you do have to document that you hired somebody back in a similar position, but I don't believe there's a compensation. I can double check that, but I don't think you have to pay him the same. In fact, I'd say it's baked into the calc that it's actually expected that you're going to be paying people less because of across the board cuts.
Yeah, she's like half the rate because we hired like an intern rather than a full-time engineer.
Gotcha.
So it's like significant. So I didn't know if that would flag anything on the.
Right. Yeah, I think the calc, Rich, you can correct me if I'm wrong. I think the calc is a percentage. There was a percentage reduction that you can do. It was okay. I can't remember off the top of my head what percentage it was. But if you're only talking one person at the lower end of the compensation, shouldn't throw it off sideways. And I guess the other thing I would do is, even if it did, right, even if you ended up with a little piece that wasn't forgiven, I'd probably say the money you made on it and not having a problem employee is worth it.
Yeah.
Duke had a question. Idle versus PPP. Idle includes working capital. Does required specialty manufacturing equipment, rent, lease, or lease to own count as working capital? Make sure I'm understanding that. So rent payments definitely work. Yeah, the idle. Yeah, and that's where the question is for Duke. Is it an idle loan or an idle grant? Because the idle grant you spend for anything.
Correct.
The idle loan is very specific to what you can spend it on. Can I use my manpower employees for our FTE count? And I believe the answer is no. They got to be on your payroll. And then for idle, I think, yeah. I think that's the dealio. Yeah, it's got to be on your payroll, which actually is really kind of a bit of a sticky wicket if you're going through a reorg or whatever, because they're just going to look at the name of the EIN of the company that applied for the loan, and they're going to look at the wage reports from that same entity, and so they're going to be on somebody else's payroll, not your own. And to my knowledge, Parky, there is no workaround for that. So that's where if you're really into that jam, I think you say, hey, manpower, I want to bring these onto my payroll so that they count.
There
I have some
exceptions
questions.
for PEOs.
Oh, what's that, Rich? There's an exception for a PEO?
Yeah.
Right. Yeah, so a co-employment arrangement. But I thought manpower is more that they're just
Right.
temps,
I think they're
right?
temps. Right.
Yeah, right. Yeah, go ahead. You had a question.
I have 3 questions. I'll just try them all at once, and you can pick whatever sounds like something you can answer.
Sure.
I think the trickiest one is that Great Basin Outdoor School, as a nonprofit serving mostly school kids, is seasonal.
Mm-hmm.
And so so we typically will have more people working part of the time during our winters, during a certain group of weeks that we're serving school kids in the spring or in the fall,
Mm-hmm.
or in the winter doing snowshoeing with kids. We do science camps with kids. We always have more people working more hours during the program season, which is about half the year, and fewer people working fewer hours preparing and wrapping up and doing the between season stuff. So we never have like a constant FTE. It varies through the year. So that's one thing that's weird. And I have a question about about rent. We have a pretty tiny, inexpensive office, but we also pay rent on a storage facility, and we pay rent to the program sites where we do outdoor school programs with our kids. Do you think that could count as rent? And could insurance possibly count as part of the 40%?
Well, I'll kind of tackle the full-time, the seasonal portion of that first. So when you applied for your PPP, you had a couple options on what covered what period to use. And there was one option, the seasonal option. If that was going to get you a better loan amount, you could have done that. Basically now, once you have your loan, now you're locked into that amount of FTEs that were on your initial application, and you're locked into how much wages you have to pay or other. So I think, and Rich, you can chime in on this, but I don't believe it's just an arithmetic calculation at that juncture. The seasonal part was the amount of the loan. You could have got more loan if it had worked to your advantage. Even if you didn't spend it, you could have still got more loan. And then on the rent part of it, you just need to make sure that what you're paying for is for like let's say you had an event or a event fee that was for the use of a park or whatever, right? Well, I think that is for the use of real property, which is rent. But I think it just has to be under a contract that was in effect on 2/15/20. So if that contract wasn't in effect on 2/15/20, then I don't think it'll work only for that reason.
Okay,
Rich,
but if it was in effect on 2/15, it might be able to be counted?
Yep, that's what I would say. Rich, any color on that?
No, I agree. It's incurred and paid, right?
Right.
So, and then you have to have the agreement that backs it up, that reflects that it was in effect, prior to COVID, essentially.
Right.
For the insurance, that's a no-go, right? If you're talking about general liability insurance.
Okay, no insurance. Okay, no insurance. Okay. Thank you.
No, you're welcome. You're welcome.
Mike, you had a great turnout today. And what's interesting, you probably had more people stay through to the end than anybody in the history of our online things. So
awesome.
Nicely done.
Okay. No, Rich, I appreciate your help and being willing to help pitch it for me. Like I said, a lot of the nuances on this thing as it's gone through. There's that handsome devil. But yeah, like I said, it takes a village. Right. I will send Dave the slide deck so you can send it out. Yeah, we are taking clients, do that pretty much every day now. So and again, great interaction. I appreciate everybody's attention, and I'm going to end the meeting. So you'll get five minutes of your day back. So enjoy.
Thank you.